Welcome to another S&P 500 analysis. Today is February 20th, 2021. After the market gave us a warning message on Wednesday, the S&P 500 had 4 consecutive down days. We have not seen this for quite a while. Is this a sign of the beginning of a long overdue pullback? In this video, we will analyze the price action of the S&P 500 and the other major market indexes and look at the market sentiment and its internals to see what is the market telling us and what possible scenario we should prepare for. On Wednesday, the Dow Jones Industrial closed with an unconfirmed all-time closing high, and that's the first warning message that we have received from the market that rough time could be ahead. In a traditional fashion, this could be a sign of a major market correction is about to begin, but since there is an outstanding all-time high from the EMini SP500 futures printed during non-regular trading hour, this puts some reservation for us to be ready for a major correction. Instead, we will exercise extreme cautions on the long side and use this opportunity to lighten up on a position. In a holiday-shortened week, the S&P 500 was down 4 consecutive days, although the loss for the week was small, but the price action seemed much worse. Looking at this weekly S&P 500 chart, we see that the range is only 65 points, and it only closed down a modest 28 point or 0.71%. And the close is still above a rising 10-week and also a 40-week moving average, and is also above this long-term megaphone channel. And the low is actually just a little bit above the previous week low, so it is still one-time framing up. And on a weekly term basis, the trend is still up. Looking at the market sentiment chart here, we see the VIX is still relatively low. It's down at this 22 level. And the put-call ratio is still pretty much risk-on, sitting at 0.52. The S&P 500 finished the week with positive divergence with the up-down volume ratio and also with the daily advanced decline. The New York Stock Exchange new high, new low still positive. It finished the week with 221 more new high than new low. And we see a small positive divergence between the S&P 500 and the New York Stock Exchange cumulative advanced decline line. The NASDAQ also show a positive divergence with the up-down volume ratio and also the daily advanced decline. And the NASDAQ new high, new low remain positive and closed the week with 291 more new highs than new low. And there is also a positive divergence between the NASDAQ 100 and the NASDAQ cumulative advanced decline line. So from the market sentiment and also the market internal, there's nothing there to say the market is getting ready for a major correction. Now let's go and take a look at the price action of the S&P 500 and the other major market indexes and see what they are telling us. Now let's take a look at the S&P 500 daily chart. We can see that here are the 4 consecutive down days from last week, and the last time that occurred was back here in mid-September 2020. We see this 4 consecutive down day come back and then come down, and then we got a little bit of a dead cat bounce before it put in a near-term bottom. Then it swing back up, try to get back above to this upper trend line here, this channel trend line. So will we see a similar type of price action this time around? Well, that depends, because I think regardless we get a little bit of a bounce on Monday or early next week, I'm still looking for the possibility of the S&P 500 come down to fill this 3871, this small gap here. And then maybe we'll get a bounce back up to the 3900. And depending how the price action is, once it get back above the 3900, will it continue to bounce up to take out the previous all-time high, or will reverse back down and come down and fill this gap here at the 3784 area? So if it does that, then it's pretty much put in a similar type of price action pattern here back in January, and that might be a little bit more of a shakeout, then get a little bit more sustainable move on the upward direction when we get a bounce off the 3784. Otherwise, then we might be looking for a surge, and that could put us on alert to look for another possibility of a beginning of a major correction. So we just have to keep an eye on that for the price action here. And the critical level to watch right now is the 38.71, and then back up to 3900 once you get down to the 38.71 or the 37.84. So the key level to watch here right now, 38.71, would it get a bounce or would it continue to come down? And looking at the 60-minute chart for the S&P 500, you can see that it tried to rally up on Friday, and it kind of faded after the first hour or so. Then you can see that it is coming down at the, toward the low at the close. So for the coming week, I'd be looking to see if it's going to get a bounce. Then it has to come back up and take out this pivot high. Then once it come up to this pivot high, then the all-time high could be back in play. But otherwise, I'd be looking for this thing to come down to this 38.71, essentially this gap here, fill this gap and see what it be able to hold above this level. And if it doesn't hold that level, then essentially I'm looking for this continuation move to move down to fill this gap here near the 37.84 and also near this trend line here. So that is the look of the S&P 500. Now let's go and take a look at the other major market indexes. And looking at the NASDAQ 100, here we see the NASDAQ 100 also had a 4 consecutive down day. And right now we're basically looking to see would it get a little bit of a dead cat bounce next week and come up and fill this gap. If it doesn't get the bounce, then we basically are looking for this gap here to get filled at the 13,280. So the key level to watch is this 13,280. If it got hold above this 13,280, then we could see a look for a bounce back up. Otherwise, we be watching for the possibility to come back down and retest this 12,439 area and fill this gap here. Looking at the Russell 2000, the Russell 2000 actually had a strong day on Friday. It closed up with a very bullish green candle here. Well, it did not come down 4 consecutive days. Instead, it came down 3 consecutive days and got a nice bounce on Friday. So right now, we're basically keeping an eye on to see would it get a continuation to come up and possibly take out the all-time high, or is this just a one-day wonder and it's a dead cat bounce? If that is the case, then we be looking for this thing to come down and retest this trend line here somewhere around the 2150 area. And if it doesn't hold that trend line, then we're basically looking for this thing to come back down toward this 1935 area here. Now, looking at the Dow Jones Transportation, you see the Dow Jones Transportation actually closed with a new all-time closing high and also made an all-time high on Friday and also got back above this price channel here. So it definitely is a very bullish sign here for the Dow Jones Transportation. And what this implies is the Dow theory is at work. And so right now, this have bullish ramification for the Dow Jones Industrial. So we're going to take a look at the Dow Jones Industrial next after we finish looking here at the transportation. So we'll see would it be able to continue to hold up on this price channel and possibly make its move up toward the 13,400 here on the Dow Jones Transportation, or this will be the last hurrah and it will pull back and come back down to the 12,707 and fill this gap. Then we'll see would it be able to hold above this level. If it can't hold above this level, then we'll be looking for this gap at 12,275 to get filled. So the key thing is, will the transportation be able to hold this channel and push it through and get up to the 13,400 next week? Or would it pull back and dip down and fill this gap here at 12,707? So those are the two key levels to watch for the Dow Jones Transportation in the coming week. Now let's look at the Dow Jones Industrial. You see the Dow Jones Industrial actually put in a little bit of a shooting star type of candle on Friday, And here's the new all-time high that the Dow Jones Industrial put in on Wednesday. Right now, we're basically watching to see will the Dow Jones Industrial pull back to the 31,055 area, basically down near that this trend line here, this intermediate price channel, and also fill this small gap near the 31,055 area. Or will it continue to push up and put in a new high toward the 32,000? After all, the Dow theory indicate that the Dow Jones Industrial will most likely see another new all-time high. It did print a new intraday all-time high on Friday, but it did not close. So it's the close that we're looking for to see will the Dow Jones Industrial close with another new all-time high. And based on the Dow theory right now, the indication is that we should look for the possibility of the Dow Jones Industrial putting another new closing all-time high. EMini SP500, there is that outstanding all-time high from the Globex hour that we also need to pay attention to for the S&P 500 to put in a new all-time high. Now let's take a quick look at the market profile for the EMini S&P 500 futures. You see on Friday it printed a poor high here, and also it did not tag this poor high that was printed on the 16th, February 16th. So there are two poor highs for the EMini S&P 500 to come up and tag. And here's the Globex all-time high at 39.59 and a quarter. So right now we basically be watching to see will the EMini S&P 500 at least next week come up and take out this poor high. And if it does come up and take out this poor high here, then there's a good possibility that it will come up and tag this all-time high. Now, there are some single print down here at the lower level here, so that could be also in play next week if the market continue to pull back. We're basically looking for the single print to get filled, and also there is a point of control, a virgin point of control at 38.54 and a half that need to be also get tagged. So watch the single print between 38.63 and 38.58, and if these single print get filled, then look for the point of control, the virgin point of control at 38.54 here to get tagged. In summary, the market internals and also the market sentiment are not telling us to be prepared for a major market correction. But the recent unconfirmed high from the Dow Jones Industrial did put us in a little bit more of a defensive mode. Right now, with the outstanding message where the EMini S&P 500 future all-time high that was printed during a Globex hour is still outstanding, that gives us a possibility that there could be another new all-time high coming for the S&P 500. And also with the Friday closing high and an intraday high printed by the Dow Jones Transportation, that based on the Dow theory will also indicating the possibility for the Dow Jones Industrial to put in another new all-time high. So with those market messages, we just remain to be cautious and also look for a minor pullback in the near term, and keep an eye out for possibility of another new all-time high from the Dow Jones Industrial and also the S&P 500. I hope you find this video to be informative and useful. Be sure to click that thumbs up to help me promote and share this video. Thank you for watching and stay safe.